In today's world of market volatility and uncertainty, your retirement plans need to be front and center. With ever-changing tax laws, healthcare worries, and an unpredictable stock market, don't overlook the vulnerability in your retirement planning. Protecting your family and estate will be difficult with shifting policies in Washington. It's more important than ever to keep an eye on retirement.
Well, hello there, and welcome in to Eye on Retirement, the show that helps you avoid the issues and the pain that you want to avoid when it comes time for your retirement planning. I'm Matt Goolsby in guest hosting for Rick Everett this week, and we want to thank you for tuning in to this show that, again, helps you avoid the pitfalls that are out there when it comes time for your retirement plan. In studio with us, we've got Jonathon McCoy, an advisor with Market Advisor Group, and along with him is estate planning attorney Gerald Eidelman of Eidelman Law Firm, and then Bill Vawter of Market Medicare Advisors, and then finally, rounding out our advisor panel this week is Joshua Cicora, lead CPA with Market Tax Services. And again, I'm Matt Goolsby. This week, thanks for joining us. Jonathon, you know, as financial advisors, we help the people every week that we work with navigate sometimes the expected things and sometimes the unexpected.
Those are the toughest.
Yeah, they are. I mean, you have to be there as that trusted advisor to help them with that. Mm-hmm. And when it comes time for helping people with maybe expected things where they're planning or they're nearing retirement, that is often, you know, something that they're in and they can get their mind around. But then sometimes the unfortunate things that happen, such as an untimely loss of a spouse, that can be the unexpected. And there can be issues that arise there that even though it's that tough emotional time that they're dealing with, but there's also things that they need to be focusing on or maybe having someone help them with in that moment. Do you have a story for us today about that?
Yeah, and you know, we were talking a little bit before the show about this, and again, the unfortunate timing of losing a spouse at any point in retirement, it's always going to be tough. Hopefully we've got those 25, 30 plus years of good, long, healthy retirement years, and we all pass peacefully in our sleep. Unfortunately, that's not always the way that it plays out, and it's always going to be generally an unexpected circumstance. And of course, this big reason we have Gerald in the office as well to help us with the longer term estate planning things. But when things strike us unexpectedly like this, losing a spouse can be a significant thing to have to deal with. And then, you know, immediately after you get through the grief and the shock of that, you've got to start thinking about, my goodness, in this case, the gentleman's wife was the working of the two. The gentleman had already quit work because of some issues he was having with his back, decided that, you know, I still want the ability to go and work part-time. I don't want the restrictions of going on disability. So I'm going to take my Social Security. And really that's kind of where our relationship started, which was, you know, them trying to decide together when might be the right time for them to file for their Social Security benefits. But it turned into much more than that, especially after the unexpected passing of the spouse within this last year. We had to start looking at, okay, what are some of the advantages that we can take in that final year of being able to file married filing joint? And we'll talk to Joshua a little bit about that today. But all of these compounding concerns of what do we need to be doing here and now? And also, what are some of the things that can wait, whether it's the healthcare questions, so on and so forth. We find so oftentimes people are looking for what is that list of priorities? What do we need to take care of first, next, and last?
Yeah, and we can get all those plates spinning at once, but sometimes it's hard to, in the moment, as the individual or the couples we're helping, to spin all those plates at once. And so fortunate they had you and this team in that moment to rely on while they were also dealing with the emotional loss of their spouse. I mean, so, you know, unfortunately, in his circumstances, I think is what you were telling me before the show started, he didn't have a choice on when to start looking at Medicare. It was coming down the road. And now that he had lost his spouse, he was going to have to start looking at health coverages too on his own. And that's when he turned to Bill and his team at Market Medicare Advisors. How did you guys step in and help in this situation?
Well, in his particular situation, he still had a good year ahead of him before Medicare would approach. But you know, people still have that anxiety looking ahead. What do we do about health insurance? And you know, I walked him through kind of a broad view of that, gave him an overview of what we're going to do in the future and how we're going to approach that. So I gave him some bits and pieces that helped calm him down, let him know what was going on, and that we still had plenty of time to make plans for that. That he had other things more current that he needed to focus on.
That's right, but now that healthcare was on his shoulders because of his wife's passing, he didn't know who to turn to start having those conversations with, and so glad that you guys were able to step in that moment.
And the big thing in that case was putting him at ease a little bit. He was thinking, I'm going to have to jump on this because we're losing coverage after the passing of my wife. We're not going to have that coverage through her work anymore. It was more just that ease of mindset that, okay, this is something that we can wait a little bit for the Medicare questions because of his age, but we did then help transition him onto the some of the Affordable Care Act coverages that are available out there, and a little education on that as well.
Right.
So what I find as an advisor in the conference room when I'm working with people is they oftentimes, especially when they're married, they don't really think about when one day they'll lose a spouse, what that's going to do to them from a tax standpoint. And as a financial advisor, we're licensed to give investment advice, but when so many people have saved in their IRAs and 401ks that have not had the taxes paid on them, that changes the dynamic there. And you bring in market tax services. And Joshua, when you came into the mix there, what was some of the things you needed to point out to them?
Yeah, this was a great place where speaking before the end of the year was able to let us make some moves that really benefited him. So we were able to target the fact that this was going to be his last year filing as a married filing joint and take advantage of those extended tax brackets, larger standard deduction. So we were able to make some deliberate moves in their retirement accounts that to take advantage of those expanded brackets and other tax attributes.
So when people lose a spouse, it literally like cuts the tax bracket in half as far as the dollars that are in there. I mean, the top of the 12% is around 43 and some change, right, for a single person. Right. And then the top of the 12% for a married is almost double that. And so when they go to being next year filing on their own, they don't really look down the road and see what implications that can have. And it's so beneficial that we work with the tax team in-house here to have those resources and get answers in the moment and not have to say, well, we can't give you tax advice. We have someone we can refer you to.
Absolutely. Being able to talk at the same time at the same table really benefits people. Like you talked about, those tax brackets get cut in half, but a lot of times the income doesn't get cut in half. So that translates to a tax hike.
Well, and in this case, the benefit of talking with Market Tax Services, on top of what do we do in the moment, what do we do before the end of the year, we were also looking forward to how are the household expenses going to be changing, because he's now considering selling their house they lived in for 30 plus years and completely changing his lifestyle, completely changing his expenses, and some of the income producing accounts that he had already been making with some withdrawals from, since he had, as I mentioned, he'd already quit working himself. They needed some of that extra income from some of the retirement savings, but that budget was going to be changing also. What are some of the things we needed to address at that point versus this year and going forward into the future years to help actually reduce expenses and ultimately reduce a little bit of that taxable income as a single person to help, alleviate some of that stress as well. We had to resituate and shift where some of that income was coming from and actually reduce it a little bit to help minimize some of the tax impacts. It wouldn't have been possible without Market Tax Services in the room.
So you mentioned there now he's a single person. I think that's, that's obvious to him. But what is not sometimes so obvious is how does that change the estate plan? And that's why it's so great to have Gerald Eidelman of Eidelman Law Firm that we can pull into these conversations and get answers to them. So what impact was this going to have on his estate plan now that he's single?
Well, it's in all cases when you have couples, they usually make the other spouse the primary beneficiary. Now, normally they have contingent beneficiaries as well, but this was a special case because they had the daughter as a contingent beneficiary listed in all of their accounts, including his account. And the problem was that she had somehow managed to convince mom to sign off on a power of attorney, and she had taken some money from mom's accounts because she had various accounts in different banks that the husband didn't even know about. And then all of a sudden she disappeared. They couldn't reach her. The husband couldn't reach her. He didn't know what to do about that situation. She had children and he had other grandchildren, and he wanted to make those the beneficiaries. So we had to look at that and restate who the contingent beneficiaries would be. Instead of the daughter, because she had done this thing that he didn't want to leave anything for her.
Not to mention, he now needs a financial power of attorney because he's lost a spouse.
That's
so he
right.
needs to have someone to step in there now and make decisions for him, financial matters, maybe even health matters too.
Right, and this was going to be more challenging because the daughter, having disappeared. And so we had to figure out, well, do you have people your age, friends that can do this? How about your grandchildren? Are they old enough to take care of you? And these were all questions that we had to explore. Now, one thing we had to also think about is the fact that he was inheriting, her IRAs or 401ks, and that once he received them and he had them under his name or continued as an inherited IRA or 401k, he was going to have to designate beneficiaries on those as well.
So really, in every aspect, there was a scenario where if we weren't working together as a complete team, which we do every day, day in, day out, for everyone we come in contact with, there were so many questions that needed answered. In fact, oftentimes, like my old science teacher used to say, that when NASA would get the answer to one question, it would actually bring up 2 or 3 more. And that's what happens when you're not working with a complete team. And that's what we do every day for people just like you. And if you want to have a complimentary consultation with this entire team, feel free to reach out to us at 316-252-8707. We have operators standing by that can book your complimentary, no-cost consultation with this complete team. Or you can go right to our website at ionretirement.com and you can book your consultation yourself right there, or even submit a question for us to use on air. Stay tuned. We'll be right back with this complete team right after this. When people work with Market Advisor Group, they get a feel of sense of family. There's a lot of relationships that are made and going on in this conference room, and we really take a lot of pride in that and a lot of satisfaction in that.
Every client we work with, we make a custom-made plan to fit them and help reach their goals in life. Another thing that makes us unique is we want to meet regularly with our clients and have reviews.
Market Advisory Group, we have a process, and the process we take people through is first to understand what they have, understand who they are, and then we put together an income plan for them and show them how they can look forward to retirement and not look, though retirement is going to be a stressful time. It needs to be a stress-free time.
A few unique features of working with Market Advisor Group is holistic in-house financial consultants. We've got an in-house CPA, Joshua, an in-house estate planning attorney, Gerald, an in-house Medicare advisor, Bill. We rely on all of those professionals for, again, additional service within our consultative process, making sure that we've got the advice and the expertise behind the recommendations that we make.
You know, as an advisor, I'm not there to sell them one way or the other. I'm there to educate them, to let them know what their choices are. Then I try to help them make the right choice where they can save money and feel confident in their decision.
Absolutely, the best part of my job is getting a stack of paperwork from somebody and they don't know what to do, and then I can turn around and give them back a tax return, but also to be able to explain what they can do next year that will give them a better answer than what they had this year.
When we've got clients that are calling and they need to help out a child or need to help out a grandchild or need to help themselves out and they're in a situation they didn't expect to be in, I really relish the opportunity to help them through that, help them make the educated decisions in somewhat stressful situations, because a lot of folks don't have that type of counsel.
We meet with so many people one-on-one in this office that don't ever end up becoming a customer or doing business with us, and that's okay. But when they leave our office, we know that we've helped them either get some answers to some of the questions they had or get some clarity on maybe their own path.
But one of the things that we hear all the time is, I wish I would have met you guys 10 years ago, because how much further could I be down the road? Well, Johnny Appleseed said, when's the best time to plant a tree? 10 years ago. When's the second best time? Today. And so if we can help people today going forward, that just brings an incredible amount of comfort and excitement for us to come to work every day.
Well, hello and welcome back into Ion Retirement, the weekly show that helps you avoid the pitfalls and the disasters that can come at you unexpectedly or expected in retirement. Working with an entire team has its benefits, and that's what we do every day at Market Advisor Group. We work together as a team, not just financial advisors like Jonathan and myself, but also our estate planning team, our Medicare advisors, and then also our tax advisors help people get a complete plan that helps us to collaborate together on your benefit. So Jonathan, with all the risks that can be lurking there in retirement, taxes and how to claim Social Security and Medicare decisions, like I said, and what do you need to do for your estate? And there can be big risks in retiring early, not just, the money side, but there's going to be other things too. Tell us a little bit about someone you said you had in the other day that's retiring early.
So this gentleman, he felt financially he was in a good situation to be able to retire a little bit early, closer to around age 60, and he had saved a lot of money in the company 401k and actually put a lot of additional money into the company stock plan, and we had to be very careful about how those assets were handled in his transition to retirement. One of the tricky things in his case was, I don't know if I want to continue working. I think I want to continue working. I'm young enough. I feel like I've got more to give, more to offer, maybe in a different industry, just being dragged down by his previous career. So the mix of these assets between the 401k, the stock purchase plan, some of the other income producing and dividend producing assets that he had were going to be tricky to handle. And if they'd all just been transitioned or rolled over to a new financial custodian, it would have triggered a lot of tax issues. And that's really where Joshua and his team stepped in.
So ask yourself, oftentimes taxes are an afterthought, but consider this: where have you saved for retirement? Most of the time, most Americans have saved exclusively in accounts that you haven't paid the taxes on, IRAs, 401ks. And if you're working with a financial advisor right now, ask them this question: what's this going to do to my taxes when I take a withdrawal? How's this going to impact the taxation on my Social Security? Am I going to have to pay more for my Medicare premiums down the road when I have to start taking withdrawals out when I turn a certain age as a required minimum distribution? Ask them, what tax advice can you give me on these accounts that I've never paid the taxes on? I would bet you that you probably hear something like, well, I can't give you tax advice, but I can refer you to someone. Why would you pay someone for incomplete advice? So when people ask us tax questions, we go down the hall and we get someone from Market Tax Services. And when you're looking at this scenario, Joshua, as a CPA helping us advise people completely, what considerations should he be factoring in?
Yeah, in this situation, we really were targeting a couple different things. Like Jonathan mentioned, he had money set in his 401k, he invested in the stock plan there, and he had the IRA. And so we targeted a couple different things. We talked about going through that IRA, maybe paying some taxes on that today, so that when he's ready to draw on that money in the future, he can do so in a tax-free fashion. The other thing we talked about was on that 401k, maybe instead of having it as a straight rollover, which doesn't have a tax implication, maybe addressing some of the taxes today associated with the company stock, keeping that then in a non-retirement oriented account so that when he needs to draw on those funds, he can do that at the lower capital gains tax rates.
So when you're helping people, Joshua, that come in and talk with us at Market Advisor Group, when do normally people that aren't working with us figure out something's cost them money from a tax standpoint?
When they get that tax bill.
And when is it absolutely too late to do anything about that?
When they get that tax bill.
And that's unfortunate, right? Because as Americans, whether it's we go to the grocery store, we get a gallon of gas, we buy a car, we go out to dinner, most of the time we want to understand what something's going to cost us before it costs us money. And if you're not working with a complete team that can not only address this in the investment aspect, the when to take Social Security aspect, the income planning aspect, the estate planning aspect, and the Medicare aspect, why would you overpay for incomplete advice? So if you want to have a complimentary consultation with this complete team, our operators are standing by. Feel free to reach out at 316-252-8707, or you can go right to our website, ionretirement.com. You can book your complete complimentary consultation right there, or you can actually even submit a question for us to use on air. Well, stay tuned because we'll be continuing this conversation when we return right after this.
How confident are you in your current financial plan? Do you know with certainty how the recent market volatility will affect your future hopes and dreams? How much are you paying in taxes? And how much are you losing to unnecessary high fees? You didn't work to save this money so that you could spend your time worried in retirement. Now is the time to take charge of your finances so you can feel confident about your future. Call in during the next 30 minutes of today's show only to set up an absolutely complimentary, no obligation, full-blown financial review that will result in your own customized written plan. This is a $999 value that we're giving away complimentary to the first 10 people who respond. We'll start with a full-blown analysis of what you already have. by running a report to untangle how much you are currently paying in fees, how you're allocated for risk, and what it's costing to work with your current advisor. Next, we'll identify your goals. Where do you see yourself in the next 5 years? Where do you want to go, and who do you hope to go there with? Is your current financial plan set up to get you there without mishap? Let's design a roadmap to create a financial plan you can follow with confidence. Get the piece that so many people are missing from their retirement. Find out how having a written plan can make a difference to your retirement dreams. Call now to schedule your complimentary, no-obligation, full-blown financial review today.
Welcome back into Eye on Retirement. I'm Matt Goolsby, continuing this conversation with this complete retirement planning team that can address questions in the moment when they come up, as they come up, because oftentimes with retirement, you have tax questions, you have questions about maybe when to take Social Security, maybe even the implications of taking it earlier versus taking it later, especially if you're a married couple. Oftentimes people have questions on, well, if I take withdrawals out, how does that impact the taxation of my Social Security? And working with the tax team in-house, we get answers to those questions in real time, not having to refer you to anyone else. Now, I get questions all the time as an advisor of, well, do I need a trust? Do I need a will? What things do I need for an estate plan? And unfortunately, my parents didn't send me to law school, and so I can't answer those questions in that moment. I'm only licensed to give financial advice. So in those moments like that, I turn to our team at Eidelman Law Firm, and I get answers in the moment to those questions. Now, Gerald, since they retired earlier, are they way too young to start estate planning? I mean, what are things they need to be thinking about since they're so young in retirement?
Right. No. There's never a wrong age to start planning for retirement. But clearly, at that age, when you're retiring, is significantly more important because you're going to be running into, okay, these are the assets that I own. This is the assets that I'm going to distribute. I know what they are. How am I going to distribute them? So this is a good time to begin an estate plan. Now, in his case, he was part of a blended family, essentially. He had 2 daughters. He wanted to take care of them, and the wife didn't have any. And he wanted to make sure he could take care of his spouse and at the same time make sure that his daughters weren't disinherited in the process. So when something like that comes up, especially with blended families, is when we turn to trust as a way to help funnel the money that would go to the surviving spouse. In this case, it would be the wife, make sure she was taken care of during life, but that the assets were preserved in that trust so that when she passes away, that money would go to his daughters and it wouldn't be wind up in some third party cousin, in the wife's side.
Well, let's explore that a little further. So say hypothetically in this scenario, he does pass away first with no estate plan in place. And then the surviving spouse, the wife, the widowed wife, ends up remarrying in the future. Technically, the children, his children, could be disinherited completely.
Absolutely, that's totally correct. When normally, in most cases, when you die without a will, the natural or the heir or the primary beneficiary turns out to be the wife. If she gets everything in this case and she remarries, the property belongs to her. Now, all of that property can be in jeopardy as far as a divorce that she may have, and also if she dies before her second husband comes, and all of her property transferred to her, there's no direct inheritance provided there for the daughters at all. Even if she did remarry, that would still be the same case because then it would wind up in her estate and it would go to her heirs, and the daughters are not her heirs.
So, Jonathan, you get questions like this all the time, just like I do, I'm presuming, and you know the answer because you set in so many appointments with him.
It's hard to not jump in and say, this is how Gerald would do it, because we have to have the professional there in the room.
That's right, because you and I didn't go to law school.
That's right.
Gerald went to Georgetown University, has an excellent pedigree, knows this stuff, deals with it day in, day out, and you can walk people through these scenarios and say, hey, what's your plan for this? Or have you considered what might happen here? And you're just such a valuable resource to have. working and making plans for you.
And I would jump in addition to us feeling like we know the answers and how to handle these situations, Gerald's got such the great industry experience there, but also if you're sitting at home wondering, I've got a neighbor, I've got a friend, I've got a coworker, this is how they handled their estate plan. If you don't know that their situation is exactly identical to yours, why are you going to put an identical plan in place, making some assumptions on what their family situation might be or what their assets may be? That can be a huge mistake. We run into that all the time, that folks have even come in with existing trusts that are miswritten because they were based on advice given from someone down the street or someone who was not a professional.
So speaking of professionals, he was so young when he retired that Medicare was a long ways off, but I find that one of the big impediments to people retiring earlier is healthcare costs. And you still had a conversation with him to let him know what he might be anticipating as he approaches the age for Medicare.
Yes, I mean, initially he had access to the company. The company retired from their COBRA insurance, from their group insurance, and he intended to use that for the length that he could. But he still had a big window of time there between that and Medicare. And we walked him through and explained to him how the government's marketplace insurance program works, explained to him there's a variety of companies out there to pick health insurance from. Today, we're fortunate. We do have a variety of health insurance choices to work with for people under 65. A few years ago, that wasn't quite the case, but it's much better today.
But it's so beneficial to, again, have the healthcare team at Market Medicare Advisors come in and have that conversation with the people that are nearing retirement. And guys, it works just like this every day. People come in nearing retirement and they realize they have all these gaps. They don't know what to do with their health insurance. They don't know what to do for an estate plan. They have no idea what tax liabilities they have in the future for retirement planning purposes. And maybe they don't even have an income plan, or don't know when to take Social Security. So that's what we do day in, day out. And we help collaborate and coordinate for your benefit. And if you want to have a conversation with us, our operators are standing by. 316-252-8707. Book your complimentary consultation with this complete team, or you can go to Ion Retirement and book your appointment there, or you can even submit a question that we can use on the show. So that's all the time we have this week. I'm Matt Goolsby, reminding you that we're here to keep an eye on retirement.
This broadcast is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific investment opportunity, offering, or issuer. Any discussion of performance or returns is not indicative of future results. Each individual investor situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in the states where it is registered or is excluded or exempt from registration requirements. Registration as an investment advisor is not an endorsement of the firm by security regulators and does not mean the advisor has achieved a specific level of skill or ability. Legal services are offered by Eidelman Law Firm. Tax services offered by Market Tax Services. Market Advisory Group does not provide legal or tax advice. Investment advisory services are offered through Foundations Investment Advisors, LLC, an SEC-registered investment advisor. This broadcast is copyrighted by Market Media Network. All rights reserved.